Hi folks, Dan Bird here with the Daily Scan midday update for Tuesday, July the 8th. And quickly take a look at what's happening with the market today. Today is Tuesday, so I will be doing a Technical Tuesday after the close later today. I had a suggestion from a subscriber to take a look at charts for IPOs because the IPO season might be heating up. Might be some potential new ones coming up, which I'll show you. And we'll look at the charts to see what happens once a company IPOs. Actually, it's very interesting. So it's a really good suggestion. So let's take a look first at what's happening today. Right now, it is 11:35 a.m. Eastern Time. And for those that are subscribers, you can always take a look at the 10-minute charts here on the charts page. You can see the market sold off yesterday, kind of going sideways today. So here's today's open right there. We're a little lower than the open so far, but not by very much. Technology actually is gaining slightly. Financials falling. Discretionary flat. Communication services down, and industrials down slightly from the open, but pretty much flat for the week. So if we look back to this vertical line, that's for the week. So communication is down, discretionary flat, financials down, technology is slightly higher. If we look at the defensive sectors to see if there's rotation, healthcare is up a little bit, staples is down, energy is up, utilities down since yesterday, trying to come back a little bit, and materials is up slightly. So right now there really isn't anything too much. It looks like technology is still holding up. Doesn't look like a big rotation into staples or into defensive areas just yet. And the rotation area, growth versus value, pretty much flat. Discretionary versus staples, up a little bit, but flat for the week. Technology is doing well. Like I showed you before, semiconductors in particular look like the best area right now. And internet falling off a little bit, but not too much. So again, technology is holding up. The market's holding up so far. Let's go take a look at the actual chart on the market bias matrix page. Market bias matrix, you can see, is still going up right now. The trend is almost a 45-degree angle heading higher. So that is very bullish. We'll see if that continues. You can see the orange here is the short-term signal going pretty much flat. Gray is a medium term, up slightly, and the long term is the one that's really gaining. It's moving up quite a bit. You can see over here in the long-term column where down here it was all red, and then we changed to yellow with a few greens, and then now we're almost all green. So everything is starting to really move on the long-term basis, moving over to the bullish side. Let's look at the S&P. S&P is down, basically not doing much at all today. Down yesterday, first day of the week, Monday. Big run up. The Christmas in July period from Stock Traders Almanac said this period is usually up for 12 days. And it started here on the 23rd. It normally starts around the 26th on this day. So we're maybe 3 days early. But let's count 12 days. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So tomorrow is day 12. And the market actually has been moving sideways, basically. It's not really selling off, just moving sideways, basically consolidating at the highs. That's pretty normal and actually healthy. It would be healthy for it to just consolidate sideways or slightly down until this 21-day comes up and meets it. So markets can correct either by price, like it did back here, starting in February, or it can correct through time, meaning it doesn't really go much higher. It just continues to go sideways, and all of the moving average lines catch up with it. So that's just a consolidation or correction sideways through time, correction through time. You can see the RSI also, relative strength has been above 70. That's starting to get back to normalized. It can make it all the way down here to 40 and still be bullish. So right now, everything is still looking pretty bullish. There's not really any reason to panic it just yet. We'll continue to watch it as we go into the summer months. But right now, everything looks pretty normal. One thing that I want to look at is some of these internal charts that I talked about on Friday. We'll take one of these each day. And today I want to look at the Bullish percent index. Bullish percent index, I haven't covered this, maybe I will, but it uses a point and figure charts, which are fairly complex. They're pretty simple once you understand how they work, but basically it's the percentage of stocks that are bullish. And there's a whole criteria on what that means to be bullish, which maybe I'll cover next week. But right now, you can see the 50% point right here where the two green and red arrows are. That's the halfway point. So when it's above that, that means it is bullish. When it's way up here, right now, 78% of stocks in the NASDAQ 100. So 78 out of 100 stocks have bullish configurations on their point and figure charts. That's what that means. If we look at this, where it crossed over the 50% line right here. Down here is the actual price chart for the NASDAQ 100. So crossed over the 50% point right there on April 23rd. And if you'll notice down here, that's also right about where the price crossed above the 21. So that's one of the reasons I really like using the 21 day. It's also a Fibonacci number. Most charts default to 20. Some people like to try to make it more personal, use a 22 or a 24 or something like that. But 20 or 21 is what pretty much everybody else in the industry uses. And that's why technical analysis works, because everyone uses the same thing. So that's why I use the 21. And the red line is a 50-day, also used by big Wall Street traders. So right now we're at one above 50 with the percentage of stocks with bullish configurations went above 50%, meaning more than 50 out of the NASDAQ 100 were bullish. Same place as when the price crossed the 21. Right now it's way up here, pull back a little bit, pull back starting here in May, pull all the way back, even though you can see the NASDAQ continued to go higher. A little bit jaggy, but it went higher. Had a pullback right here, pretty much where this peak was. Had a little bit of a pullback right here, right where this peak was, and now it's moving higher again. So very, very bullish. When it gets above this red line right here, that's 80%. That means 80% of stocks have bullish configurations. That means it is very bullish, and pretty much everyone is buyers at that point. That's usually the time when it will correct, either through price or through time, one or the other. All right, so that's what that looks like. Let's go take a look at the scan real quick. And I hadn't set this up ahead of time, but you'll see how easy it is. I'm using ACP for this in stock charts. For those that are stock charts subscribers, this is a great platform for certain things. I don't use it for everything, but it's really good for certain things, like putting two charts side by side is a really good use of it. And let's now take a look at the scan. First, I want to look at the elder bar scan, the bullish, where are we? Daily scan down here, momentum scan, bullish. Let's see if anything's crossed. So APLT is on here, just beginning to move higher. JD.com, same thing. So all of these have had big sell-offs. You can notice where the RSI is up here. RSI went below 30 and then crossed above it right here. And then right now it's actually it's higher, but it's higher down here. So that's not a divergence. And then on ZIM, which has a huge yield, let's see if I can bring the yield in here. 70% yield on ZIM, 75% now. You can see how volatile this is. So this is just beginning to move up. This might be a good time if you want to get that high yield stock. Annual dividend is $12. So right now this is selling for about 17 bucks. So if you had 1,000 shares of this, then you'd make $12,000 a year, $1,000 a month just on dividends. But it's very volatile, so keep that in mind. All right, let's take a look at the optionable stocks, Bullish. See if there's anything interesting. Here's a semiconductor stock. There's an energy stock right there. There's JD again. Lucid has been on the list for a couple of days. It's really starting to move up now. It hit the list back here on this day, and a little bit of a pullback yesterday, and now it's really starting to move higher. It's got a big squeeze on too. Eli Lilly is on the list. It's starting to move, so it's beginning to go up. Healthcare, which has really been have sold off lately, trying to make a comeback. All right, next let's look at Magnificent Seven, large cap. Lilly is the only one on that list, and IBD, Bullish, nothing. Let's see if there's any IBD bearish stocks. A couple of bearish ones. Got AEM, which actually was bullish yesterday. Today it's got a big red candle. Rubric starting to sell off, sitting right on its 50-day moving average. It's got a squeeze, so the squeeze might be firing to the downside. And then Urban Outfitters also starting to move lower. If we look at the bearish side for Magnificent Seven, nothing there. And for the optionable, these are all stocks that have weekly options. Boston Scientific, Intuitive Surgical is on there, Coca-Cola, Spotify. So all of these are sitting right on their 21, getting ready to roll over. And T-Mobile. So that's what it looks like. So that's the daily scan for today. Let me know if you have any questions, comments. Stay tuned tonight when we will take a look at all the IPOs that have placed in the last, back to 23, so the last 2 years. We'll see what their charts look like, see what happens right after they IPO. Does it make sense to get in then, or should you wait? And then I'll look at the ones that failed also, which is also really interesting. All right, thanks for watching. Stay tuned, and please like and subscribe so that I can keep this channel going. And I'll talk to you later today. Take care.